Hey everyone, welcome to another Hatling EDU financial accounting homework walkthrough. This week we're going to go over Chapter 10 homework on contingent liabilities and accrued liabilities. And this problem is a payroll summary, which is related to the meat of the homework for this week, is calculating payroll deductions, and other details, and recording the journal entries. And there's a lot of details in payroll, a lot of calculations. And if you find this topic interesting, make sure to take my payroll accounting course that's going to be offered spring of 2026. And it's a 2-credit all online course through Anoka Ramsey. So the problem for this payroll summary is to prepare a payroll summary worksheet for the week ended December 9th. We have each employee, how many hours they worked, their hourly rate, a salary if that's applicable, federal income tax withholding, and then amounts withheld for US savings bonds because that's the retirement investment that we're offering them. And Mantle and Williams are office staff and they're on salary, and all the other employees are sales personnel. And the sales personnel are paid 1.5 times the regular rate for hours in excess of 40 hours. So we're going to have to calculate the overtime pay. And the Social Security rate is 6% and 1.5% of each employee's annual earnings for the purposes of this problem. And this is just to make sure that we have round numbers. In reality, Social Security tax is 6.2% and Medicare tax is 1.45%. But for the purposes of this problem, we are going to use the rates given to us in the directions, and it gives us more round numbers when we're doing our calculations. And we're going to prepare the summary worksheet and then record the journal entry for payroll this week. So while we get set up here, we're just going to go through and calculate each employee's earnings based on the hours worked. And we can start with the salaried employees first because that's pretty simple. Their pay for the week is their salary. Mantle got 1,800, Williams 2,000. And note that says enter all amounts as positive numbers and round intermediate calculations and file answers to the nearest whole cent or 2 decimal places. Okay, now we'll start with Aaron. Aaron worked 46 hours this week. So 40 times 68 is 2,720 in regular earnings. And overtime earnings was 6 hours times 1.5 because we get time and a half for overtime times $68 is 612. And 612 plus 2,720 is 3,332. For our next employee, they worked 41 hours times 62. 40 times 62 is 2,480 for the 40 hours of work week. And they had 1 hour of overtime times 1.5 times 62 is $93 in overtime pay. And for Clementa, we take 40 hours times $70 an hour, 2,800. Then we get 8 times 1.5 times 70, 840. Now, DiMaggio only worked 35 hours, so there's no overtime pay. We just take 56 times 35, 1960. Griffey Jr. worked 45 hours. And Robinson worked 36. Sorry, here for Griffey Jr., we did not calculate the overtime correctly. We had to take 5 hours times 1.5 times 62 is 465. And that comes out to a total of 2945. And Vaughn had 2 times 1.5 times 62, 186. And now we have to total up all of our earnings amounts. Okay, now we have to calculate our Social Security and Medicare tax using the rates provided, and they give us the rate of 6% Social Security tax and Medicare of 1.5%. So we're going to multiply our total earnings by those amounts. And it hasn't been applicable yet, but just remember that we're rounding to the nearest cent in each of these calculations. Also, one thing to keep in mind when doing payroll in the field is that Social Security tax is only withheld on the first part of earnings that is Social Security eligible. And the taxable maximum for Social Security in 2025 is 176,100. And after that, Social Security tax is no longer taken out, but the Medicare tax is still taken out. And in reality, ADP is going to be doing most of these calculations for a company, but it's still really important to know the payroll system, payroll regulations, and the amounts that are supposed to be calculated so that um, so that we can remain compliant with any regulations, so to speak, and that we can check our work. So there's for Social Security tax, that's all of our amounts. Now for Medicare, we're multiplying each of these by 0.015. Which is 1.5% that's given to us. And see, this is going to be 3860. Note in here, we're going to round to 4418. And there we go. That's the remaining amounts for our Social Security tax, for our Medicare tax. And round up here. Here it looks like we just made a mistake here with the salary amount. Accidentally copied it from the one above. So we have to recalculate our Social Security and Medicare tax based off of the $2,000. Perfect. Okay. On to calculating the total deductions. And we're going to take total earnings minus the Social Security tax, Medicare tax, federal income tax, and the U.S. savings bond investments to get the total net pay, which means the total deductions are the other amounts. That's going to get us 1,110 cents in deductions and a net pay of $2,231.90. And this is a sales salary expense. And the amount of sales salary expense is going to be the total earnings of the employee, and the these deductions are the employee paid portions of the Social Security and Medicare tax. The employer also is going to owe Social Security and Medicare, but that's not going to show up on the employee's pay stub. That's not going to show up on our payroll worksheet when we're calculating how much to cut a check for each of our employees. And so our expense is going to be their employees' total earnings. We are just withholding for them and paying them the check for their net pay. And I'm going to cut out the rest of these calculations because um, you guys get the idea on adding up all of the deductions to arrive at the deductions column and then subtracting to get the paid column. But first, I do want to walk through dividing the sales salaries from the office salaries. Remember, the office salaries are the salaried employees, and they do call them out by name. And that's what's going to go into sales salaries expense compared to office salaries expense. And so hold on a moment while I cut out the entering of all the calculations here. Okay, and these are all of our amounts for all of our payroll deductions, net pay, and sales salaries expense and office salaries expense. And it all foots vertically, which means if we add up all of our earnings, it equals the amount at the bottom. That's really important for calculating our integrity of our calculations, and payroll is something that you don't want to mess up. People will notice if their paychecks are cut wrong. I mean, that it's people's money that they rely on. So um, it's really important to correctly determine every employee's uh, net pay and deductions. And there's also a regulatory component to that and a compliance to that as well. So now we're going to journalize the payroll entry for the week. If we take a look at our chart of accounts, we have office salaries expense and sales salaries expense. And the journal is going to be as of December 9th because that's the day of our payroll. For the weekend of December 9th. And our sales salary, if we go to our payroll summary, our sales salaries expense debit 19,600. We have to start with what we know. It's like completing a puzzle. So then our office salaries expense 3,800. And then we need to create a salaries payable credit. And this is for the amount of the checks that we have to write to all the employees. Now, we didn't actually write the checks yet. We didn't send it to them, so we're not debiting cash quite yet or crediting cash quite yet. We're crediting the payroll or salaries liability or salaries payable. Let's take a look at our chart of accounts, the other liabilities that we have. We also have bond deductions payable, so we know we're going to need that. And federal employees, federal income tax payable. We also know that we're going to need Medicare and Social Security tax payable. And that just about fills up our accounts. I'm just using that to remove the comma there so I can copy it easier. And Medicare tax payable. And there we go. And our debits do equal our credits because our salaries expense minus the deductions for the payables to Social Security tax, Medicare tax, employee federal income tax payable, bond deductions, then that equals the salaries payable. That's the net pay of the employees. And remember, these taxes, these are paid by the employee. That's coming out of their paycheck. The Social Security and Medicare taxes that the business is paying out of the business portion, that's going to come in a separate journal entry. Um, thank you, everybody, for working through this with me today. I hope to see you in the next video. You have a great day.